There's a secret so powerful that Albert Einstein called it the eighth wonder of the world. It's a law that can turn a small amount into a fortune or ignorance into regret. This isn't magic, it's mathematics multiplied by time. This law is compound interest, and if you understand it, time works for you. If you ignore it, time works against you. So, what is compound interest really? In simple terms, it means you earn interest on your interest. It's growth that feeds itself, creating an upward spiral that accelerates with time. Imagine you invest $1,000 at a 10% annual interest rate. In the first year, you earn $100. The next year, you don't just earn interest on the original $1,000, but on $1,100. In 10 years, that initial $1,000 becomes over $2,500. In 30 years, it grows to almost $17,500. That's not luck, that's patience working as profit. This highlights the invisible power of small beginnings. Most people overestimate what they can achieve in a year, but drastically underestimate what they can accomplish in a decade. Investing just $5 a day in something that grows 10% annually can become over $300,000 in 40 years. The small, boring, consistent decisions don't seem powerful at first, until time reveals what that silence has been building. The poor often seek speed, but the rich understand that true velocity comes from consistency. Let's look at the story of two investors, Sophia and Lena. Sophia starts investing $200 a month at age 25, but stops after just 10 years. Lena waits until she's 35 and then invests $200 a month all the way until she's 65, 3 times longer than Sophia. Yet, at age 65, Sophia, who invested for a shorter period and contributed less money, has more wealth. Why? Because her money started compounding earlier. The difference between being rich and broke isn't always income, it's when you start. This brings us to the greatest enemy of compounding, interruption. Every time you withdraw early, skip a contribution, or sell in a panic, you reset the compounding curve back to zero. Wealth isn't destroyed by market crashes. It's destroyed by impatience. Even the best investments need time to work their magic. This is why the truly wealthy don't obsessively check charts every day. They trust the long-term slope of time. Impatience is the tax the poor pay for not understanding the power of compounding. But compound interest isn't just about finance, it's a universal principle. Every book you read compounds into wisdom. Every workout you complete compounds into health. Every act of discipline you practice compounds into character. Every professional connection you nurture compounds into opportunity. The real compounding machine isn't your bank account, it's you. Your habits, your knowledge, and your actions are all subject to this powerful law. So why do so few people get rich this way? It's because of our psychology. Our brains are hardwired for immediate gratification, for the now, not for the later. We crave instant results and visible rewards. Compounding, however, is quiet and invisible. For a long time, it looks like nothing is happening until suddenly everything happens at once. This is why compound interest rewards what I call faithful boredom. Those who can endure the silence while others chase noise will eventually build lives others can't even imagine. This leads to what I call the curve of wealth, the exponential moment. In the early years, growth feels agonizingly slow. It's a flat line. But then, one day, the curve bends sharply upward. That's the compound breakthrough, the point where your money starts earning more than your effort does. It's the moment your time starts working harder than you do. The poor often never see this moment because they quit before the curve bends. The rich, however, patiently wait for that bend, and then they enjoy the freedom it brings for the rest of their lives. So, how can you master this law? First, start early, no matter how small your contribution. Time is your single greatest multiplier. Second, stay consistent, even when you feel bored. Routine is the rhythm of compounding. Third, never interrupt the curve. Don't sell out of fear. Trust the long-term slope. Fourth, reinvest everything. Every return becomes the seed for the next cycle of growth. And finally, think in decades, not days. Real wealth is measured in patience, not just profits. The true investor doesn't always look rich. They look calm. The universe rewards those who respect time. Compounding is not a clever trick of finance. It is the fundamental law of life itself. What you nurture daily grows. What you neglect decays. Compound interest isn't about numbers, it's about faith. Because every small act, done long enough, becomes extraordinary. Thank you for watching. If this idea resonated with you, consider subscribing for more insights into building a wealthier life.